Imagine having a spare $50,000 to invest today. Where would you put it? In this video, I'll share the 3 elite dividend stocks I'd buy without hesitation, guided by the wisdom of legendary investor Bill Nygren. These picks could transform your portfolio with growth, yield, and resilience. Every investor faces the pivotal question. If I had a lump sum of $50,000 to invest now, where would I deploy it? This figure represents the kind of high-conviction investments I make when cash accumulates. Drawing from my own investment strategy and lessons from renowned investor Bill Nygren, I'll reveal why Canadian Pacific Kansas City, Extra Space Storage, and Carlisle Companies are my top choices today. Let's dive into the value-driven approach that makes these stocks stand out in a volatile market. In the world of investing, what would you do if you had a lump sum to put to work today? For me, that figure is $50,000, a sum that affords the opportunity to make meaningful, high-conviction investments. Currently, I've been strategically reallocating my capital, seizing opportunities during market volatility, and diversifying into real estate while concentrating investments in Landbridge. But looking forward, I need to rebuild and ready myself for future potential gains. Guided by the philosophy of legendary investor Bill Nygren, whose strategy emphasizes purchasing undervalued businesses with a focus on long-term growth and shareholder-aligned management, I've identified 3 elite dividend stocks I'd allocate this $50,000 to without hesitation: Canadian Pacific Kansas City, Extra Space Storage, and Carlisle Companies. Let's explore why these would be my top picks. Bill Nygren's approach, which I've adopted and adapted, revolves around 3 key principles: buying at a discount to intrinsic value, prioritizing long-term per-share growth, and supporting companies with shareholder-aligned management. Nygren, like Warren Buffett, appreciates the art of finding businesses trading below their fair worth and holds a preference for enterprises that offer steady value compounding over decades. Additionally, businesses with owner-minded leadership, those that invest judiciously and return value to shareholders through dividends and buybacks, are given priority. Nygren's understanding of volatility as a buying opportunity rather than a point of sale shines through, presenting an idyllic template for navigating market uncertainties. With a clear aligning philosophy, it's time to delve into the reasons behind my stock picks for this $50,000 allocation. Let's start with Canadian Pacific Kansas City, CPKC, a dominant railroad operator spanning the critical North American trade routes across Canada, the U.S., and Mexico. CPKC boasts an extensive network of over 20,000 miles of track, vital for trade in bulk commodities like grains, fertilizers, and coal. Despite recent stagnation due to cyclical economic peaks, a merger-induced pause on buybacks, and tariff concerns, the underlying strengths of CPKC are significant. Post-merger debt targets have been met, making room for a dividend resume with a considerable hike of 20%. Looking forward, the company projects robust earnings growth of 12–15% per year through 2027, with trade reshoring trends providing an additional boost. Despite currently modest dividend yields, a low payout ratio signals notable room for growth. If economic indicators brighten, CPKC stock could see a substantial rise. Next up is Extra Space Storage, EXR, a leading self-storage REIT. At first glance, the self-storage sector may appear saturated. However, Extra Space distinguishes itself through scalability after its acquisition of Life Storage, positioning it as the largest operator in a fragmented industry. Its same-store revenue outperformance and adaptive rental rates demonstrate its superior pricing power and solidify its resilience against economic shifts. Presently offering a 4.8% yield and bolstered by a 12.5% 5-year dividend KGR, XR is poised to deliver compelling returns. Although cyclical nature of the self-storage sector ties its fate to housing market activity, its secular drivers, such as housing shortages and urbanization, are likely to offer sustained growth opportunities. Finally, we have Carlisle Companies, CSL, a robust dividend grower predominantly engaged in commercial building products. Riding on the secular trend of aging commercial real estate needing renovation, CSL offers enticing growth potential. A near 30% return on invested capital showcases its efficient growth model, while its long-standing dividend history with a 5-year KGR of 14.9% and manageable payout ratio underscore its financial health. Carlisle's Vision 2030 strategy aims for 5% organic revenue growth alongside disciplined acquisitions and margin expansions. With current share prices reflecting a 25% decline from recent highs, there's a potential upside of 130% should Carlisle meet its long-term goals. While current cyclic weaknesses challenge its immediate outlook, The long-term demand driven by secular needs makes Carlisle a prolific choice for this hypothetical investment. In conclusion, if I had $50,000 to invest today, I'd allocate it evenly across Canadian Pacific Kansas City, Extra Space Storage, and Carlisle Companies. These three elite dividend stocks offer a blend of growth, yield, and resilience, seamlessly aligning with the disciplined, long-term investing approach championed by Bill Nygren. While exposed to cyclical sectors, their management strategies, market positions, and growth incentives make them poised to capitalize on economic upswings. Emphasizing principles such as intrinsic value, shareholder alignment, and strategic market navigation can guide investors toward long-term success and market outperformance, just as they have done for value investing stalwarts like Nygren and others. To recap, if I had $50,000 to invest today, I'd split it equally among Canadian Pacific Kansas City, Extra Space Storage, and Carlisle Companies. Each presents a compelling case, from CPKC's strategic infrastructure assets to EXR's industry consolidation potential and CSL's dividend growth legacy. These stocks align with Bill Nygren's investment principles, offering a balanced mix of growth, yield, and resilience. They navigate cyclical sectors while focusing on intrinsic value and management alignment, essential for long-term compounding. Now that I've shared my top stock picks, I'm curious. What would you do with $50,000 to invest today? Are there specific sectors or companies you're eyeing? Let me know in the comments below. Don't forget to like this video and subscribe for more insights on strategic investing and market opportunities. Let's build a community of informed investors together.